Hi, and welcome to another regulatory episode here with me, Carmel Fisher. I am excited to bring you some insights on our latest breakthrough company, Beeline Holdings, Inc. They are listed on NASDAQ as BLNE, and I have with me CEO Nick Liuzza. Welcome, Nick.
Hey, Carmel, thank you.
Very excited to jump straight into a little bit more about Beeline Holdings. I understand that they are the parent company of Beeline Loans, Inc. So give us more of an overview of the company and how everything fits and pieces together for you.
Yeah, sure. Beeline Holdings is a fintech mortgage provider. We're aiming to make the mortgage industry easier for the next generation.
Well, that sounds much needed for sure. So looking a little bit at, recent impressive growth of 38%
Yeah.
year over year in loan origination growth, while the broader market only grew 9%. You've also reported a $6.9 million in net loss with growth constrained by capital access. But can you walk us through your specific capital raising strategy and the timelines to profitability?
Yeah, look, we expect to be profitable in the August-September timeframe. We're introducing a new product that's not tied to interest rates, which we're very excited about. Our revenue growth as a result of 24 versus 25 or 24 versus 23 had to do with the fact that we brought in a wider variety of products that were more geared toward the millennials. And that's our focus, is providing mortgages to the next generation, making it easier for these guys to get mortgages, because it's not as easy to get a mortgage as it once was. And the Freddie Fannie standards are difficult. And so by bringing in a wider variety of products that are easier for approval is one of the reasons why we grew so fast.
Wonderful initiative. Now, can you talk to the break-even point in terms of loan volume, and how do you plan to bridge the gap until the mortgage market recovers in, say, late 2025?
Yeah, look, the mortgage industry has been very difficult. It's, people saying this is the worst market in 30 years, and I can attest to that. It's been very difficult. The good news is that we expect to see interest rates come down at some point. That might not be to 26, but hopefully it is 2025. At the end of the day, we decided to introduce a product that is not tied to interest rates to allow us to get to profitability faster. It will infuse equity into the marketplace, and we only need 50 transactions a month to get to profitability. This particular product is explosive. It's new, and it's being launched in mid-July.
Awesome. So the MagicBlocks spin out with the one-click AI sales agent is fascinating. You're essentially productizing your internal AI capabilities for the broader mortgage industry. What's the revenue model here?
Yeah, look, we've created a lot of AI. Our software we have a proprietary platform from top of the funnel all the way through lock. A lot of that does include parts of MagicBlocks, where we were the first company to introduce an AI chatbot to the mortgage industry. It's a highly sophisticated piece of software that now has become a sales agent for the industry as well. And we decided, since the product is performing so well, it's converting 6 times better than a human being does, and it's having more conversations 24/7, 365 at zero cost, basically. We decided to roll it out into its own company. And that company is now live with 16 beta clients. We expect to have 50 clients by the end of June with that particular company. And it's an AI-driven platform allowing any consumer to come to that platform, build their own AI sales agent, and within an hour be up and live without any cost at all. You only pay for conversions, basically.
Incredible. Are you licensing this technology, taking transaction fees, or building a SaaS business? And then how large do you estimate this addressable market to be?
Well, look, the reason why we rolled that company out is because every single company in the world needs to sell their product, and so it doesn't just apply to mortgage; it applies to everything. And so this company is based in Australia. It has 16 beta clients, 10 of which are not even based in the U.S. And it's going to onboard 2 to 3 clients per day, and that's on a limited rollout. So it's an explosive opportunity. And it's live.
Amazing. And maybe you've touched on this, but just will you be licensing the technology or taking transaction fees?
Sorry. Yes, we are licensing the technology. You can go to MagicBlocks now and start building your own AI right this second. And you can basically direct that AI to speak your brand and to start facilitating sales activity throughout your network. It's licensable right now.
Great. Could MagicBlocks potentially become a more valuable revenue stream than your core mortgage origination business?
Well, that's a really good question. I don't know the answer to that. I know that in the mortgage business, revenue grows very quickly in favorable rate environments, and we're going to get into a favorable rate environment, and we're going to see Beeline's revenue explode, basically. But as mentioned, we are introducing a new equity product, and that product has explosive growth opportunities as well. So it's a combination of, will we grow faster than MagicBlocks? I don't know. I mean, this MagicBlocks is a brand new company with cutting edge technology, and it's an international company at the same time. So it's hard to say. Both are going to be highly successful, though.
Fantastic. And as with all things AI during these early days, so to speak, I guess it's a time will tell model for most AI-driven businesses at this point. So your Bob 2.0 AI agent shows impressive metrics, 6 times lead conversion, 8 times application increases, but AI is becoming table stakes in fintech. So what specific proprietary advantages does your AI stack have that competitors like, say, Rocket Mortgage or newer fintech players can't replicate?
Well, look, I think that's right. I think that AI and using AI to convert and to create new sales has become table stakes. I think the key is how you implement it, and what are you using to what AI are you using? In this particular case, this is a highly customizable piece of AI that has a brain on top of the AI to regulate and to ensure that the sales agent speaks your language. It communicates how you want to communicate. It can read customer sentiment. It knows when the conversation needs to lead to a conversion, and understand if it's not going to lead to a conversion, maybe it needs a live person or it needs more information. And so understanding and being able to reason like a human being can, and knowing what the next course of action is what we're really good at.
Amazing. Are there any strategies in place to maintain this technological moat? As we know, AI tools are becoming more commoditized as we speak.
Yeah, I think that's a really good question, right? Because it is, I wouldn't call it a moat. I would call it an evolution, right? I mean, you want to continue to evolve and make it better and better so you stay ahead of the pack. So you're not creating a moat around what you have. You're just making it better, stronger, and that allows you to get a competitive advantage.
Interesting. So we read too that you're launching an interest rate neutral equity product, and that's coming in Q3 to inject liquidity into the housing market. This sounds like you're moving beyond traditional mortgage origination into more complex financial products. What's the risk profile of this product? How does it fit your regulatory framework? And what portion of the business do you expect this to represent?
Well, listen, it is a very exciting product, and it's going to have explosive growth, and I'll talk about that why in 1 minute. But it's important to note that we are not changing our model. We're complementing our model to make it easier to push money out to people who need it. And that's what this product does. It's going to push money out to people who can't qualify for a cash out refi, or they don't want the monthly payments. They don't want interest, right? They want a way to basically bring cash into their household in an easier way. This product will allow you to sell a portion of your equity. Within 4 to 5 minutes, we can make a decision, and we can basically fund the transaction in about 72 hours. There's no credit check. There is no underwriting. It all is based on the fact, do you have equity or do you not have equity? And if you do have equity, you can leverage this product and create a cash flow stream with no payments. You don't have to pay this back until you sell your property, whenever that is. And so it's a very unique product. We're able to do this because we're leveraging a stable coin in order to fund the product.
Okay, so are you essentially becoming a more diversified fintech company rather than just a mortgage platform?
Well, Carmel, we already are a more diversified platform, right? We already are licensing out our products. We talked about Bob and MagicBlocks. We have a product called Blink QC, which we're licensing out, which is a QC-based product. We believe that combining SaaS revenue with the origination fee, or a B2B model with a B2C model, is very compelling. I think we already are a lot different. But yes, this tips the scale in a whole new way. I mean, I think we will be the only mortgage lender that has a product that's not tied to interest rates, the only mortgage lender that can push out cash in 72 hours, and the only mortgage lender that is willing to push out cash with no credit check, no appraisal, basically just do you have the equity or not. And then, the cherry on top is the fact that there's no payments, and you're not responsible for paying this back until you sell your property.
Sounds like
pretty unbelievable, yeah. And
it does sound pretty unbelievable.
Yeah, and it's here. Like, we're doing beta transactions on this next week, and we'll go live with this to the world, basically, or to the U.S. at least, late July.
Can't wait to see this roll out. So your expansion into vacation rental platforms and fintech partnerships shows the impressive strategic vision, right, in building an ecosystem approach. Now, as you navigate the current market cycle and position for the expected recovery, 25-26, we're hoping, how are these alternative channels contributing to your growth strategy?
Yeah, so it's important to note that we're really good at, like, as I said, supporting and supplying mortgages for millennials and the next generation, but we're also really good at investment property loans as well. And we've combined our platform will allow you to basically do either or. And so we see the investment property loan business growing very quickly. The short-term rental business has become very explosive over the past 3 to 4 years. You're seeing more and more call it novice investors who don't have a lot of experience with real estate investing jump into real estate investing. I can't tell you how many millennials I've spoken to who are actually living in their parents' basement and own 4 or 5 different rental properties because they like the way that the rental property market works. So we see these partnerships that we're forming with companies like Doorvest and Rambu as a great way to get our message out, our word out, and supply loans to a different audience.
Incredible. And you've just answered my question on the opportunities you see in the partnership channels and how they'll complement, obviously, your direct customer acquisition efforts. So thank you so much.
Thank you very much. You have a great day. Thank you. Bye-bye.
Thank you.
Okay, bye.
Hey guys, thank you for watching the show. Please go ahead and subscribe, like, or comment. It helps us know what you want to see, what you're enjoying, so we can bring you more of this fantastic revelatory capital market news. Thank you so much.
To you as always by The Harvest Podcast, available anywhere you listen to podcasts.